Welcome to Global Tax Talk. I'm Will Morris, and I'm here in Toronto, Canada, where I'm delighted to be joined by Colin Mowatt, our Canada tax policy leader. Colin, welcome.
Thank you.
Good. So let's talk about current affairs, if you will. At the start of 2025, Canadian Prime Minister Justin Trudeau announced that Parliament would not come back until, at the earliest, the end of March. Trudeau will also resign as Prime Minister once the Liberal Party elects a new leader. So, Colin, could you explain what this means for the tax policy outlook in Canada, and what's the impact on outstanding tax proposals?
Yes, it has been a tumultuous year in the Canadian tax world. The Trudeau government, as you know, was really challenged to pass or introduce any legislation in the fall session. Ultimately, that led to the Prime Minister resigning and actually proroguing Parliament till March.
Right.
And so what that's really meant is that we now didn't have what we typically see as tax legislation introduced in the fall session. And what that's meant is a number of the 2024 budget measures never got enacted. And the most significant of those was the 2024 change in the capital gains effective tax rate, which was supposed to take effect in June. No legislation was introduced, so that led to a ton of uncertainty. Ultimately, the government's relented, and now that rate change is not going to take effect until 2026. Assuming the government stays in power. Right. So there's a lot of going on, a lot of uncertainty.
Yeah. Okay. So let's talk about trade, because we can't not talk about trade. And we're seeing change that is really reaching not just the tax departments, but obviously the C-suite as well. And the Trump administration in the US, those trade policies are taking center stage. Tariffs cut by country on specific products, such as steel and, depending on your preference, aluminum or aluminium. As well as reciprocal tariffs, all of which impact Canadian businesses. So which industries are particularly affected, and how are companies responding to this dynamic environment overall?
First, it's kind of important to understand that Canada and the United States, and Mexico for that matter, have been party to some form of free trade agreements since really the late 1980s. And so what's that resulted in is limited tariffs cross-border, across North America. Right. And that's created a unique kind of ecosystem for manufacturing, especially in, say, the auto sector, right, where you can see a part of a car cross the border 6 times before it ultimately reaches the end consumers. Yep. So if you introduce tariffs into that dynamic, especially at 25%, which some of them have been proposed, sure, you could suddenly end up with effectively a manufacturing coming to a halt on both sides of the border based on the cost dynamic. So most economists believe that a full-blown tariff war will result in a recession within Canada and significant impact on the U.S. economy as well. Right. Canada's response has been measured, at least at the moment, but there's significant political support against fighting back. Right. So what the originally announced countermeasures were targeted at specific industries that would not hurt the Canadian consumer necessarily, right, but would show an impact. We can't say that over time that those won't get significantly more severe as we go. Okay. And the other element is that both the federal and provincial governments have committed to unspecified support for businesses and workers, and really removing interprovincial trade barriers and allowing companies in Canada to diversify their trade in the event of a trade war.
Okay. And not completely unrelated to tariffs, let's talk about digital services taxes and Canada's DST in particular. It was enacted in June 2024, and taxpayers who meet certain thresholds now have to make annual returns and other obligations. The US, under the Biden administration, requested dispute settlement with Canada under the USMCA process, and the 75-day consultation period has now expired. So, Colin, where are we with this process, and what may the future hold for this levy, particularly given a recent executive order from the US, which is clearly focused on this, and again, sort of linked it back to tariffs. So what do businesses need to know about their compliance obligations, and what may unfold?
So the digital services tax is a great example of how Canada's really stuck in the middle of, say, Europe and the United States. Yep. So Canada had originally agreed to wait for a Pillar 1 solution in lieu of implementing a European-style DST. Ultimately, when it saw that there was no Pillar 1 opportunity or a solution in sight, it decided to go it alone and introduce, effective for 2022 onward, the digital services tax. And surprisingly enough, the U.S. reaction was not particularly favorable. And so we're now looking at this could result in punitive tariffs and other measures by the U.S. So a number of business leaders in Canada have been pushing to obviously get rid of the DST, and many are hoping that it becomes abandoned as part of the negotiations
Right.
over the entire trade regime. Until that time, large multinational firms subject to the DST will be expected to remit amounts. And we know that the Canada Revenue Agency is actually reaching out to them
Right.
and expecting them to register and
Yep.
remit their amounts by June.
Good. Well, Colin, there's lots going on here, and obviously with changes in leadership and an election coming up as well, probably more to come. So thank you very much for joining us, and we will look forward to coming back and getting your views on this shortly. And thank you for joining us, and come back next time so that you stay global tax ready.